Congress just approved a massive 130-page housing bill that lawmakers say will increase supply and improve affordability. It passed with overwhelming bipartisan support, 390 to 9. Most people won't read it. I did. And today, I'm breaking down what's actually inside this legislation, and whether it has any real chance of lowering housing costs. What just passed? The bill is titled the Housing for the 21st Century Act. Its goal is straightforward: increase housing supply in the United States. Not rent control. Not mortgage rate cuts. Not price caps. Supply. After passing the House, the bill now heads to the Senate, where it will likely be combined with a separate housing package. But before that happens, it's worth understanding what's actually in this proposal, because some of the most important provisions are buried deep inside. Part 1. Federal zoning guidelines, not a federal takeover. One of the largest sections directs the Department of Housing and Urban Development, HUD, to publish national zoning guidelines. Important. These are recommendations, not mandates. HUD cannot penalize states or cities that refuse to adopt them. So what's being recommended? Reducing or eliminating parking minimums, allowing duplexes, triplexes, and fourplexes by right, increasing building height limits, reducing minimum lot sizes, encouraging housing near transit, allowing accessory dwelling units, ADUs. In simple terms, this section targets local zoning rules that often slow or restrict new construction. Supporters argue restrictive zoning is a major reason housing costs are high. Critics argue zoning decisions should remain strictly local. The bill clearly leans toward one idea: if it's easier to build, more housing will follow. But that raises the big question: even if more homes get approved, will they actually be affordable? We'll come back to that. Part 2. Pre-approved housing designs, pattern books. This is one of the most practical pieces of the bill. It creates an accelerating home building grant program, allowing local governments to develop pre-approved housing designs, often called pattern books. These could include duplexes, triplexes, townhouses, cottage courts, small multifamily buildings up to 25 units. If designs are pre-approved, builders can skip lengthy approval processes for each project. And time matters, delays increase costs. The bill even allows HUD to demand repayment of grant money if these pattern books aren't used within 5 years. So this section isn't symbolic, it's meant to produce results. It focuses heavily on missing middle housing, the space between single-family homes and large apartment complexes, an area where supply has been especially limited. Part 3. Streamlining environmental reviews. Another major section addresses environmental review requirements. Certain housing-related activities would be reclassified under lighter review categories, including down payment assistance, tent-based rental assistance, rehabilitation of small residential buildings, converting office buildings into housing. Infill development. Infill refers to land already served by infrastructure, not undeveloped areas and not high-risk flood or wildfire zones. Supporters say environmental reviews can delay projects for months or even years. Critics argue those reviews protect communities and environmental safety. The bill requires 5 years of reporting to measure whether these changes actually reduce delays and administrative costs. Still, faster approvals don't automatically mean lower prices. That depends on how the market responds. Part 4. Major increase to FHA multifamily loan limits. One of the most financially significant changes involves the Federal Housing Administration, FHA. The bill dramatically increases per unit loan limits for federally insured multifamily housing projects. In some cases, caps rise from around $40,000 per unit to over $160,000 per unit. That's a major shift. Construction costs have surged in recent years, and outdated loan limits often didn't reflect real-world expenses. If developers couldn't borrow enough to cover costs, projects stalled. Supporters say this modernizes housing finance and helps projects move forward. Critics may worry about increased federal risk exposure. But in practical terms, this makes financing multifamily construction easier, and financing is often the biggest bottleneck. Part 5. Manufactured and modular housing. The bill also promotes manufactured and modular housing, factory-built homes that can often be constructed faster and at lower cost. It updates definitions and expands financing tools for these housing types. Additionally, it calls for a study on workforce housing, defined as households earning roughly 80% to 120% of area median income. These are middle-income families, people who earn too much to qualify for low-income assistance but still struggle with today's market prices. The bill acknowledges that affordability challenges extend beyond the lowest-income households. Part 6. Consumer protections. The legislation isn't only developer-focused. It also includes provisions to exclude certain disability benefits from income calculations, improve coordination between HUD, the Department of Agriculture, and the Department of Veterans Affairs, expand family self-sufficiency programs, reform housing counseling, establish an eviction helpline. However, some lawmakers argue that regulatory reform alone won't lower costs if housing programs remain underfunded, a debate likely to continue in the Senate. What this bill does not do: it does not lower mortgage rates, cap rent increases, ban institutional investors from buying homes, guarantee immediate price reductions. This is a long-term structural supply bill. Even if it became law tomorrow, local governments would still need to revise zoning rules. Developers would need land and financing. Construction itself often takes 12 to 24 months, sometimes longer. This is not a 6-month fix. It's a multi-year shift in how housing gets built. And expectations matter. What happens next? The Senate previously passed its own housing package. The two bills differ in several areas, particularly around grants and regulatory reforms. Now lawmakers must reconcile both versions. Given the 390-9 House vote, there's clear momentum. But negotiations could significantly alter key provisions before anything becomes law. So the real question is this: is making it easier and faster to build the right long-term solution to high housing costs? Or should Congress take a different approach entirely? And what would actually make housing more affordable where you live?